Rob McEwen, Chairman and Chief Owner of McEwen Mining, MUX on the New York Stock Exchange. What is McEwen Mining? It's a young company that has big aspirations. We have 2 mines right now and 2 development projects. A gold mine in Mexico, a silver gold mine in Argentina, a development project in Nevada, and another one in Mexico. Recovery? I think we're on the beginning of a new uptrend in gold. Well, it's overdue. There are a couple of factors in here. One is the same reason, the debt's piling up and making a lot of governments actually insolvent. They've expanded the money supply aggressively and debased the currency. And those are contributing factors. But on top of that, you have the advent of negative interest rates that is causing a lot of people to question where do they keep their cash, how do they hold their investments. The big argument against gold in the past used to be it cost you money to store it. Now it's costing you money to store cash with negative interest rates. So, and people are starting to think, what about insurance companies, banks, pension funds, annuities? How are they going to meet the promises they made when you have right now $12 trillion of government debt that it carries a negative coupon? They will never make the 5, 6, 7% returns that they were looking for. So they have to look for more risky investments, and that makes people very anxious. And so people turn to gold. Well, the big companies I don't think have changed their mind yet. They're large companies. They're almost like if you had an aircraft carrier and tried to turn it around, you can't spin it on a dime. It'll take a couple of days. In the large mining companies, it'll take probably a year or 2 before they can change their situation. They've been in a cost containment, so cost cutting, trying to improve their margins, trying to get rid of their high cost operations. They basically sold their growth, and it's going to take a while before they can start focusing on growth again. The intermediates and the juniors are much more agile and alert to opportunities. So you're starting to see exploration companies, the capital markets are opening up and giving them capital so they can go explore. The intermediates, there's been some consolidation, but that I think is going to step up. One of the big changes in the capital markets was the number of intermediaries that disappeared. Brokerage firms that were servicing the resource sector, and there was no business for the last 2.5 to 4 years, and they ran out of business and closed their doors. So a lot of the funding of the very small is going to be hard, and it's an industry that's being dominated by big banks, big brokers. So I think in our case, our goal is to get into the S&P 500. We're a little over $1 billion market cap, and we need $5 billion. So we have some organic growth that could increase our production by 60% over the next 3 years, but we'll have to do some M&A to get to the $5 billion threshold to get into the S&P 500. It's very important, in my mind, to preserve the upside for our share owners. The people who sold royalties, who sold metal streams, or who hedge, are basically putting a cap on the upside. If you're a shareholder, share owner, and you buying my shares because you think the price of gold and silver are going higher, you probably don't want to see me putting a cap on that upside. And that's why I've been so adamantly opposed to it. In down markets, the royalties and the metal streams effectively stole the profit margin from they didn't steal it, management gave it to them, sold it, to have enough financing to do whatever they wanted to do. But it's very short-sighted. To me, it's a Faustian bargain. You're getting something you need right now, but there's a longer term, much higher cost. You've sold your soul. Much better. Much better. Argentina was a basket case for the last couple of years. There's a new government, very pro-business. I'll give you an example. We have a mine down there, which is a joint venture with our partner. In 2012, we received a dividend of $20 million. In 2015, we received a dividend of $500,000. This year, the budget was done up using $10.50 gold and $14 silver, and they said, you're going to get a dividend of $7.5 million this year. Much better than the $500,000. But that was at a much lower metal price. So we've already received the $7.5 million this year. And if you were to take the difference between what the budget was done at and the current, it's $270 higher per ounce gold, and it's $5.60 higher for silver. So that translates into, if you annualized it, better than a $30 million improvement in the cash flow for our portion, our 49% ownership. So from $500,000 the year before. The government is very pro-business. They've removed the export taxes on mineral concentrates and doré, which is an unfinished bar of gold or silver. And that, we have another project down there that's a large copper deposit, and that's had very positive impact on it, because we had designed a plant there that wouldn't produce a concentrate, so it wouldn't be exposed to the 10% export tax. We're now looking at a different design, and we think there's very big inroads into the capital. We think we can drop the CapEx by 40% and drop the OpEx by at least 10%. So we're quite excited about that, and we'll have a study out on that property the end of the summer. But it's 20 billion pounds of copper. If you put it on a gold equivalent and included the gold and silver credits there, it'd be the equivalent of 35 million ounces of gold. So it's a huge deposit with better than a 35-year life once in production. It's cumbersome. It's more extended than before. So if you make a discovery, it's going to take you longer to put it into production, and you're likely to face higher operating costs than you would have in the past, because there's more people wanting to take pieces out. Architecture. Well, there's now a McEwen School of Architecture at Laurentian University in Sudbury, Ontario. I come at it from two fronts. One, from grade 2 to grade 12, I knew exactly what I was going to be. I was going to be an architect. And maybe I wasn't as diligent my last year of high school, so architecture didn't happen. But about 15 years ago, I was putting some companies together, and I said, I'm still doing architecture, only it's financial architecture, building companies. So one was a love of architecture and a real appreciation for elegant, efficient, functional design. Two, my first exposure to the mining industry, where it was hands-on, was the summer after first year of university, and I went up to Sudbury and worked for International Nickel and as an underground miner. And at the end of the summer, I was offered, I wasn't offered, but the mine captain said, if you apply for a scholarship, you'll likely get one. And I said, well, thank you very much for that recommendation, but I'm not going to be in mining. That's not part of my career plan. So Sudbury and mining introduced me to an industry I never thought I'd go into, but have met with great success in. So the architectural program is quite interesting because it's taught in French and English, and it's First Nation elders giving consultation and advice to the architectural students. It's a design-build program, which makes it a little unusual. They experiment with materials and build all sorts of structures. And it's dealing with sustainable, green, cold climate, and also innovative uses with lumber. and timber products.